Hello, and welcome to the first episode of Financial Enlightenment. My name is Andre, and I'm here to make you understand that doing business is not that difficult if you have the right information to start with. In today's episode, we will address the problem of financial freedom and how to put yourself on the path to success. What it comes down to in terms of freedom is first acknowledging the fact that you need to save before you start on the journey of starting your own business. If you don't have any money to begin with, you have an opportunity cost of time in the sense that your time can be used to go and work for someone else and get a wage, a salary every month, every week, of which you can save a portion of it. Suppose that you go and work for a big corporation and you do it for about 2 years in a row and you get a salary of $2,000 a month, let's say. If you save $1,000 of it every month in 2 years, you will get close to $25,000. At that moment, you'll have an opportunity cost of capital in the sense that if you saved 25k, you can put the money to work for you. You can find a good investment in the stock market that will give you 1 or 2% a day. And if that happens, you get around $250 every single day. Of course, this is not going to be easy to begin with because people will not have the apartment up front not to pay the rent. They will have to pay utilities, they will have to buy food, and so on and so forth. But acknowledging the fact that you have to save to get on the path to success, it is the most necessary thing that you need to be aware of at the beginning. So, supposing that you did what I said, you saved 1,000 from 2,000 in 2 years, and you have 24,000. If you choose the financial markets and the stock market to be the place in which you'd like to place your savings, and if you're successful in managing money of about, let's say, 1 or 2% a day on a 25,000 assets under management, you can earn 1 or 2%. And as I said again, you can get a return every day of $250 or $500 every single day. In 4 days, you'll make your income, if of course you're successful and your strategy pays off. In a month, you can earn 4 times that, so we can talk about $8,000. But what I wanted to get to, where I wanted to get to, is the fact that at one moment after you get the savings and you have an opportunity cost of capital, you will say that, okay, I made probably 5,000 this month, and my opportunity cost of time is 2,000 if I go to work. Will still be necessary for me to go and work for someone, or will I focus 100% on investing and earn double or triple that money? It's a difficult question to answer because you'll still need an income to pay your bills and to stay relevant with the daily consumption that will keep your life as it is now. So every successful trader, every successful investor or businessman gets a base salary. Even if they own the business, they still get a CEO salary, a CFO salary, or simple worker salary just to entertain their lives, to pay for the bills, and to allow the savings to roll over to very big amounts. And the question might come, until when? When is it enough to leave the labor market, to leave full time and to relax on the savings that you have? And innovation might tell you that you should never retire and you should never stop investing. Disruptive innovations might tell you that even if you started your own business, there are going to be firms who will challenge your current incumbent position and you should always look for new opportunities, new investment, new strategies to keep you relevant. So the question is somehow tricky because, again, innovation and other hungry people will challenge your position. But if you get to, let's say, a comfortable sum of money right now, and if you measure your monthly expenses probably till the end of an average life expectancy in the world, you will say, okay, I got $10 million and my average expense is around $3,000 a month. And right now I'm 40, so I'm gonna live 40 more years and I will spend around, let's say, 36,000 every year for 40 years. So 1.5 million will be enough to allow me to live in my current living standards till the end of my life. Yes, that's a static approach of money. That's a static approach to the future. However, financial markets and the markets for goods and services are dynamic. So even if you have $10 million now and the inflation will boom to, let's say, 100%, your money will not be that much anymore in 1 year's time. Your buying power will shrink continuously based on the level of inflation. So you'll still depend on how the monetary policies will work and how the fiscal policies, again, will be working. Also, not to mention that if you keep your millions in the bank and the bank goes bankrupt, you will be insured by the government up to, I don't know, 250,000, which based on the millions that you have is nothing. So it will never be enough, but if you are a smart man and if you reinvest continuously your savings, you might say, well, at one moment I think millions will be enough, or a million, or whatever is going to be enough, because I'm shrewd to place money in good investments. I'm shrewd enough to invest with the innovators, and I will always be somehow at the top of an industry with my shrewdness and capability of how to invest. But investment and managing money is a subject for another video. Overall, the outcome of this video, of the first video on our channel, is that you need to save. You need to go, if you don't have money, you have to go and work for someone else and save as much money as you can from that job. Then when you have enough, you need to look for places where you want to invest. It might be in the public market, so you might invest in the financial markets, or you might want to start your own business, which is riskier, but it presents higher returns. Depending on your risk preference and your education of financial markets, you will have to place those money somewhere. I think this is all for today, and in the next videos we will talk about how to be shrewd in the financial markets and how to place your money so they can earn consistent returns.